Do you want to learn how to measure lot size for your trades on gold? In this video, I will teach you how to apply a position size calculator for gold trading. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. First of all, let's discuss why do you need to measure lot size for your trades. If you trade price action, if you trade key levels, most likely the peak value of your stop loss is always different. Sometimes your stop loss is 1000 pips, sometimes your stop loss is 500 pips, and sometimes your stop loss is just 50 pips. In trading with a fixed lot, your potential loss will depend on the size of your stop loss. Bigger will be your stop loss, bigger will be the potential loss. However, measuring the lot size for your trades, you can risk the fixed amount of money for all your trades. Let me show you how. Imagine that you decided to sell gold. You spotted a horizontal key level and you set your sell limit on that with the stop loss lying above that. In order to measure the lot size for this trade, you should do just one single thing. You should measure the pip value of your stop loss. You should take the entry and measure how many pips are in your stop loss. Here we have 1141 pips. We should remember that number, and now we should open the position size calculator. In order to measure the lot size for our trade on gold, we will apply the position size calculator on my FX book website. And here we just simply need to fill the needed inputs. So first of all, we should choose the account currency and let it be the US dollars. And then the account size, and let's just input the average trading account size, $10,000. Then we should input the desired percentage of risk. And I always recommend my students to risk 1% of their account per trade. So let's input 1. And finally, the stop loss and pips. Our stop loss is 1141. Yes, and let's click calculate. So here will be our lot size. And with that lot size and with 1141 pips stop loss, we will risk just $100 or 1% of our trading account. And if we are right with our short trade and if the market drops from that resistance, we can also try to buy that horizontal support. And we decide that with that trade, we will have a tiny stop loss. If we measure the pip value of that stop loss, we can see that the stop loss of that trade is 2 times smaller than the stop loss of our short. And in order to risk the same percentage of our capital per trade, we should again apply the position size calculator and measure the lot size for the trade. Returning back to our position size calculator, the only input that we should change right here is the stop loss and pips. And this time our stop loss is 565. So we click calculate, and here is our lot size for that trade. So I hope you got the point. Here we are planning 2 trades, and the stop losses for these trades are different. One trade has a relatively big stop loss, while the other has a very small stop loss. But measuring the lot sizes for the trades, we will risk the same amount of money for the trades. I hope, traders, that you enjoyed this lesson. Let me know, traders, if you want to see more videos about risk management. Also, let me know if you have any questions. I always reply. Traders, please don't forget to like this video, subscribe to my YouTube channel, and let me know what do you want to learn in the next videos. Thank you so much for watching.